What's going on, guys? How are you? How are you doing? Today is Monday, and you know it. We are going to show you a strategy that you should be using. And this strategy is simple. This strategy works on all synthetics, right? Across the platforms, across the brokers. So what I want to do today is to show you a strategy that you can use every day, that you can use to day trade. And this strategy is based on the D1 candle. What you are going to do is going to be supported by the charts, and everything that I'm going to do is here. So let's get right into it and talk about it. So what do you know about a chart, about the D1 chart, about the D1 candle? So the D1 candle is the candlestick that shows the movement of price in a day. So the day opens at what? At 000, right? Midnight, to what? To 23:59. So depending on where you are from, this is the what? The range of the day, which means that the open price is recorded at this time and the closing price is recorded at this time. Then what we don't know, the time that these two prices are going to occur, is the what? Is the high or the low? So that's what we want to use. There is something that you can use from there that we want to take advantage of. So when you read a chart, there are four prices that every candlestick shows. We have what we call the OHLC. So what does this mean? It means that the open, the high, the low, and the close. So these are four prices that each and every candle shows. So here, remember, we are concentrating on the candlestick on the D1, which is this one that we have drawn here. So what do we know from this candlestick? What we know is we have a high of the day, we have the low of the day. So these two prices, low of the day and high of the day, these are the prices that we want to take advantage of and see how best can we benefit from the knowledge of these two prices, right? We have the open, we have the close if it's a bearish candle, then we have the open and the close if it's a what? If it's a bullish candle. So we don't care if it's a bearish or bullish. What we need to know, or what we know right now, is in each and every day we are going to find a high of the day and we are going to find low of the day. No matter what happens, we are going to find these two prices. So how do we take advantage of this knowledge or these two prices? You might be asking yourself, but don't worry. Let's dive right into it. And I want to show you how I'm thinking about this thing, how I'm seeing it, and how we can take advantage of it, right? So let's take, for example, the price opens, right? It goes up and goes down, right? So if we are looking at the M15 or the H1, what you're going to see is very simple and it's very striking. You're going to see that price goes up to form the what? The daily high, goes down to form the daily low, and comes back to close. So this is the representation of this chart if it is represented in a what? In a line chart form. So what we are seeing here on this particular one, we have two options, or we have two opportunities to what? To make money from this market, just by understanding how the candle on the daily works, right? So we have the open, we have the high, and we have the low, which means we have two potential entry points, which means we have this reversal after the daily high has been logged in, and we have this reversal after the daily low has been logged in. So how do we take advantage of this? That's very simple. Let's go to charts, and I will show you some charts on deriv, and I will show you how to take advantage of this. So with that knowledge that we have just displayed there, right there, and that we have just explained, right, we go on the M5 chart. So the M5 chart, I like it because it shows me the full view of everything that is happening in a market, right, on the daily perspective. So remember now that this period separator denotes the beginning of day, then this one at the far right denotes the what? The end of a day. So what you want to focus your energy on is what is happening inside the what? Inside these two period separators, which means inside these two yellow pillars that I've just put on your screen right now. So what you have to know is simple. You are going to have minimum of two or minimum of one reversal in a what? In a day. So we want to catch one of those. So there are many ways of doing it, but this way that I'm going to show you is the way that I think is what is the best when it comes to what? To catching these ones. So it means that when price is going up, right, it forms a what? A trend. So let me show you this again on the what? On the whiteboard. When price is going up, it's not going up in a straight line, right? Price is not going up in a straight line. So let's look at it like this. When price is going up, it's going up like this. Okay, this thing is It's black, right? Let's put it white here so that you guys can clearly see what I'm trying to happen here. When price is going up, right? Price does not go in a straight line like this. It goes up like this. So when price is making its way to the high, it will make this kind of market structure on the what? On the M5, right? So what you want to understand is the reversal. So if you are looking at market structure, how do you know or how do you spot a reversal? Simple. I have explained it many times on this channel, so I'm going to show you how to do that. When price is going up like this, it will form what you call higher highs as it goes up, right? But it will leave behind these lows that it will not break. So price is not breaking these lows, right? So when price gets to a reversal point now, remember here, we are just looking at market structure and seeing how it goes, right? It will break one of these lows. When it breaks one of the lows, it signals a change of character, and this is the first sign of a reversal coming in, or the first sign of a high of the day being locked in. Let's go back to the charts and try to see what is happening. So on every day, you will see that you start with a trend either to the high of the day or to the low of the day. In this case right here, today we have a trend to the what? To the low of the day, right, where we have this high. Then after that high, what do you have? You have this what? This low right here. So this is the first low in the series of what? Of the lower lows that price is going to what? To give to you until the very last low at this bottom. So on this very last low, you should see something that price fails to take out this low, right? That's sign number one of a reversal coming in. Price fails to take out this low, and what does it do? It goes and takes out a high. So this is an abomination in the what? In the confines of a what? Of a downtrend. So in a downtrend, remember we said we are not touching any highs; they are sacred, right? But when you see a high being taken out like this, it means that price has changed the character or the behavior, which means that this is sign number two of a reversal. So what do? You wait for price to make a what? To make a retest of this particular thing that you say this high has been taken out. Wait for price to make a retest of that zone. And how do you enter this market? Remember, we're on the M5. What you just need to see after price does this are two consecutive candlesticks in the direction that you want to go. If you want to buy, you have to see two consecutive bullish candles after the what? The retest. So we have the retest here. So we are just waiting for two consecutive buy candlesticks, and we can put our trades and go. So this happened here after this what? After this pin there. Here we did not have two consecutive buy. Oh, we had them here. So this might be your entry, and remember your stop loss is going below the structure. So this is the structure. Entry, buy, and you are going to target the next high. So the next high in this case, you remember those highs that were not taken out. Those highs are now acting as what? As targets for you now. So this is how you do it, and if you enter your trade right here, you see how it goes. So you are just going to use the knowledge of the what? Of the D1 candle in trying to understand where price is going. So in this case, how many reversals did we have? We have one reversal, which you can see that this is the low of the day, and another reversal, which is the high of the day. And where did price start? Price started here, which is the open at this particular point, and price closed here. If you go to the D1, you see a candlestick that actually looks like this, where this is the open and this is the close. So it will be like this. Then we have a what? We have a pin which signals the what? The high of that particular day. Then after that, we can see that we also have another one to the downside that will signal the what? The low of the day. So you see that all the price that would have happened here is can be represented by one candle here. So we have two reversals, either from the high or from the low. This is what you have to use, and this is what you have to use to understand. And remember, we were using charts from deriv.com, and the links to open an account and trade these indices are in the description down below. Go open your account, fund your account, and start trading with me. And don't forget to join our Telegram channel so that you get signals as we trade these indices. I will see you in the next one. Shocks out.